Well, something about self-storage that's always intrigued me is to look at past recessions. And a lot of people talk about them being, recession resistant, as multifamily is as well. But here's what's interesting. Right now, there's a lot of scrutiny over raising rents on residential real estate. I mean, they're proposing even, a national rent control. We'll see what happens. I doubt something like that passes. But if it did, that would really hurt the industry. On a self-storage unit, think about paying $80 a month for a self-storage unit personally, and then them saying, hey, your next month's going to be $100. Sorry, but prices went up. That's a 20% hike. That's huge. That's massive. That's bigger than you see in residential real estate in most markets in most years. But they can do it, and it's not a big deal. It's $20. Most people are just going to say whatever. It's 100, was 80. I don't really care. It's $20. So your margins can be quite significant doing a value add self-storage play. So I think that's an interesting one to look at. Mobile home parks. The thing that intrigues me about mobile home parks, if they're diversified, you've got a lot of different pads in a portfolio or in a fund, is that we are so undersupplied right now as a nation for affordable housing. And that's what it is. You and I were chatting about Section 8 before, so I'm not necessarily talking about that particular program. I'm just saying if somebody working class, working at the gas station, fast food restaurant, retail is making 40, 50K a year as a household, that's the type of housing that they need. And so I think during recessions, which is looming over our heads as we speak, that's the time that these sectors really, go crazy and are needed the most, I'll say. So that's another one to look at. Here's my general philosophy. Invest the most in what you know and understand the best, and then hopefully you can diversify out of that too. In case any one thing happens to one particular sector, you can make a pivot as an investor and not just be a one-trick pony like I talked about earlier with my single-family homes. If all I am is a fix and flipper and I know nothing else about anything, and that strategy stops working, like in 2022 or 2008, 2009, I'd just flat be out of an income, or I would lose a ton of money. So I want to be able to switch to other things. Aside from that, one quick note on publicly traded REITs, real estate investment trust, high correlation to equities. And so they're buying a lot of the same types of properties that we buy, large commercial, multifamily. And despite the performance being healthy, if equities are dropping 20, 30%, that's pulling down the price of REITs also. And so there's opportunities sometimes to kind of buy the dip, and what used to be a 4% annualized yield turns into an 8% annualized yield. And then you've got some equity upside potential. So never financial advice, not telling any of your listeners what to do, but these are just things to think about in different sectors. And so I was buying REITs in 2020 when the market crashed. I was buying I think it was last October. The market was bottoming out again. I bought more REITs during that point. And I like REITs because they're liquid. If I need 50K tomorrow because a syndication pops up that I want to do, I just sell some REITs and then boom, I got my 50K. So pros and cons, right? Nothing's perfect. Everything has risk, but there are good opportunities, I think, for different sectors for different reasons at different times.